Hey guys, welcome back to Control Z Crypto. So, just released a long video talking about multi-matic and doing a lot of work today and yesterday to redo my model of fixed term ROI contracts. And I was just having a look at this fairly new one called MATIC STAKE that went live in the last just over 24 hours, so it's very new. And I wanted to just take a look at it and use this as an opportunity to test my new model, basically see how this new contract stacks up against things like Multimatic and just to see if I can do some analysis on it. So let's take a look first at what MATIC Stake is. And if you're familiar with ROI apps at all, you will recognize this layout. It's very similar to MATIC Staker, so they've called it MATIC Stake. It's pretty much exactly the same in terms of how it works. It's basically a cut and paste, from all I can tell, on the Polygon network. But let's have a look anyway. Let's have a look at the contract and how it's set up. But basically, you've got 6 different plans. You've got your lowest plan. These 3 plans across here are withdraw anytime plans, and you can see the total return is lower across if you're given the option to withdraw anytime. And these 3 plans are your locked-in contracts, where you basically can stake a certain amount, and at the end of that lock-in time, assuming there's money left on the contract balance, you can get that money back. And these periods increase, and consequently your daily rate actually decreases over time. So, as a general rule, I would always invest only at the low end, because you never know where you're going to end up by the end. But also, I just want to show you guys pragmatically, if you just look at this large number here, that's not really representative of the whole situation, right? It doesn't mean that if you believe that the contract's going to last 28 days, this is the best option, and I'll show you why. So let's just crack open the calculator here. Say I went on day 1 and invested $100 into this plan here. In 14 days, I would get $222.15. So $221.50. I think I've only got 10 in there, but 10 times that is $221.50 at the end of 14 days. I'd cashed that out. And if I believed in the plan at the end of that period, if I believed the contract was going to last another 14 days to the full 28 days, I'd take that $221.50 and put it back in the same plan, $221.50. I'd come out with $490.60. If I did this straight up here, I'd get $372. Not to mention the fact that return rate would have increased by then. So you actually get, regardless of whether you think that the contract is going to last 28 days, you're still better off going into the 14-day plan. It just makes more sense. You see the daily rate goes down, and you're kind of just extending your risk without really increasing the amount of money you get out of it. So that's why I only ever look at these plans basically, and when I'm modeling them, I'm only really looking at these plans, because I'm just kind of writing this off out the box that these don't make a whole lot of sense when you kind of spend 5 minutes just thinking about how the whole thing works. A few other things to notice just on this front page. They've spelt things like staked wrong. This is obviously not a high quality page. This is not a high quality design. It's a copy and paste with a few design tweaks. And the other thing to notice is some things are just reflected incorrectly. Like, for example, plan 1 has an 8.7% daily profit with 122% return, but plan 4 has the same percentage profit, but with kind of 100% on top of the return. So how does that make any sense? And the answer is it doesn't. They've just put the figures on this page are just not correct. So that's one thing to think about. These are not the correct figures, and you need to look at the contract. You need to look at the audit to get the correct figures. So I'm going to have a quick look at the audit here. So this is what I look out for. we always see this high issue. It's an ROI app. That means it's a Ponzi scheme. So we know that, and that we're working to work out our risk in around that constraint. This low severity optimization is pretty much ignorable. It's only if you're doing massive amounts, more than 100 parallel deposits, which I'm not doing, and I couldn't imagine anyone would do. So I'm not concerned about it all. So at a baseline, we know it's an ROI app. We know it's got no major loopholes that the operators could just do a rug or anything along those lines. So from that point of view, I'm comfortable that it's fairly solid. No vulnerabilities or backdoors were found, which is great. And then we see how it works here. And this is some key information that you can get out of this. What I'm looking at here is the project fee. So this is how the devs make their money essentially. And what this project fee represents is 10% of all deposits go to their wallet and not onto the contract balance. So remember, whenever you deposit something, it will still show on the website that you've deposited the amount of money that you have. I put 20 onto this, and I'll explain to you my strategy in a moment. So if I put 20 onto this, it'll show me that I've invested 20, but actually what has hit the contract balance is only 18 MATIC, because they've taken that to MATIC, 10% of this deposit, and taken that for themselves. That's how this works. That's how they get paid. And that's in the model as well. And then you look at these total returns for each plan, and you can see here that the plan 1 starts at 8% daily, and plan 4 starts at 13.7. So if we go back to the page here, so 8%, this should be 13.7% as a starting point. Basically, it's a typo. It's incorrectly represented, as is this and as is this. So this is not 8.7, 7.2, and 5.7. This is something more like 13, and 10. So that's, it's not a good sign, but really it doesn't matter what's on this front page. It all goes into the smart contract, and you actually get paid the rates that are in the smart contract, which are these rates. So one thing I'll add to this is similar to MATIC Staker, but different to Multimatic, in that there is a rate increase. So every 24 hours, these rates go up by 0.5%. So the daily rate goes up by 0.5%, which means that the total return over the period goes up by 0.5% times the number of days. So that would be 14 times 0.5%, which is equal to 7%. So in 24 hours, this will go up to 129% return on this plan 1, for example. And what that means is that, well, let's have a look. I've talked about this before in terms of how I do my calculations. So in the standard ROI model, we have a contract balance that goes up like a kind of a nice little curve, goes up and then goes down. But I've got the example from MATIC Staker here. Because of that increase in that daily increase in percentage, you can see it kind of goes up and then there's a sharp drop. So that's partly because of the daily increase in percentage, and that's also partly just because it's a locked period. And as I've redone my modeling for these locked period contracts, we'll be able to see how they basically follow a similar curve anyway. So I think that's all to be said about the contract. This is a pretty light on audit. There's not much else to say. Basically, it's a clone of MATIC Staker for all intents and purposes, but it is, and it still has this 0.5 increase a day. The website's pretty shoddy. There's lots of errors on the website, but the contract itself seems okay. So let's take a look at the model. And before we do, I just want to call out what piqued my interest about this, because these contracts start up all the time. These ROI DApps start up all the time, and this one has basically what I would call a massive first day investment. So this is really high. 1.5 million MATIC staked per day. So look, this seems to me like a really it's possibly some kind of manipulation by the devs in investing in their own contract. That is definitely possible there. Or it could just have a lot of people heaping in on day one to try and get some returns, which is a good strategy here. But if it doesn't go much beyond 14 days, you're still not going to get a payout. So this is interesting, and let's see what impact that has on the modeling, because this is actually a tricky one to model. I'm not sure how likely that that initial investment is to continue. So if I go over to the MATIC stake model, and please ignore these figures for the time being because I'm intending to change them during this video. So I've got a daily balance of 1264. The reason this is not updating is limitations in the API, so don't worry about that. We've got about 1.2 million contract balance at the moment. And as I've explained in a previous video, the difference between the total investment invested and the contract balance at this stage is that 10% deposit fee that that the app devs are getting. So that's basically coming off the deposits and is not making its way on the contract fee. They're taking that amount of money. So they will have made I don't know what that is, 1.2 million, sorry, 120,000, 150,000, whatever it is so far from deposits. It's not a bad return for them. So the rate increase is going up daily 0.5%, and if you look at the current return rate in the calculation table, you can see that that is going up correspondingly by 0.5% times the minimum return. So it's about 7% a day approximately, and that's reflected in that table. There's no tax reduction here. There's no what I call tax reduction is when there is a withdrawal tax that goes back into the contract. That doesn't exist here, so that's a 0. Reinvest rate, there's no auto reinvestments beyond this percentage interest, so there's nothing to put there. Put a fairly nominal referral adjustment because I have no visibility on how many referrals are coming out, and it's probably not much, but just to have, for the sake of having something in there, I've got 0.1%. And by the way, if you want some further explanations on this, please watch the very long video I just posted on Multimatic, because I do go through this in a lot of detail. Withdrawal fee, there's no fee on the withdrawals on this contract. The devs are only getting paid out of the deposit fee. So basically you withdraw what you're owed. And I'm taking the cumulative investment at this point to be, well, let's just say that this is not reflecting correctly, because the way that the spreadsheet is worked out, we're about a couple of hours into 13th of March, and it's taking an estimate at the end of the 13th of March. That's definitely not correct. It's basically whatever is on the site, which is about 1.5 million. But that's really an indicator. There's no modeling that's based on these numbers. This is just an indicator of how close the model is to the live actuals, and because we're out by whatever that is, about 20 hours, then we're off here. So days operational 1, I think it's slightly more than 1 from the perspective of the chain. It's kind of, there's a few hours peeking into the previous day, but I'm counting that as just 1 for simplicity here. So we had 2.4 million invested just on day 1. Sorry, I think this is average daily investments. Forget about that. Contract health is not really that indicative on day 1 of a chain. So what I've put in here, that should be day 1 of an app. Sorry, what I put in here in terms of the model, I'll talk a little bit about, because this is unrealistic, but I wanted to just kind of show, in order to get a curve here that makes sense, like we need to have this kind of daily investment increase along the same trajectory, basically. So we got 1 point whatever it is million, here it is, this is the actuals, 1.479 actually invested under the contract. This is what I've extracted from the contract. If you go into the transactions, you can pull out all the transactions on Polyscan. So I've extracted that information and put it into the spreadsheet. If you keep getting 1 million invested a day, then you get the same kind of curve as we were looking at, pretty similar. Like it'll go up, and then as the contract term expires, people will start taking their money out, but it'll kind of drop at a manageable rate because you're still getting more and more investments in as you go, and it's kind of more of that V rounded kind of curve, and that would put the target end date at April the 2nd. But I don't think that that's a good indication of how long this is going to last, just because having seen other examples of this kind of contract run, $1 million a day in MATIC is a massive amount and is completely, I would say it's impossible. It's not going to happen anywhere near that rate. What I would predict is something along the lines of what we've seen elsewhere, where we've seen, let's say, look at the multi-matic again, like we did today. Basically, here were the new investments. You kind of got a little bit of a ramp up and you hit a peak and it ramped down, and now it's kind of dropping down to virtually nothing in a few days. So this is not going to happen, but I wanted to show this for illustration of what would be needed to sustain this kind of initial investment. You need to basically increase the day-to-day investment, maintain this blue line of daily investment just to keep this curve. So if this dropped down, which I would expect to something a lot more, reasonable, which might be 100,000, let's say 100,000, what does that do to the curve? Well, you can see it there. So here we go, the blue line, the daily new investments drops down from the million down to about 100,000, and here it goes. And that means that the red line goes up, but at not quite as sharp an angle, the red line being cumulative investment. And the green line, the contract balance, continues to grow minus that 10% divergence from the red line, which is because of the deposit fee. And then it basically hits a point where it's time to pay out and the contract just crashes. So given my evaluation of MATIC stake overall is just, given this really, really high day one investment, this is just extremely high day one investment. There is no way, in my opinion, that this will continue to survive beyond the 14-day lockup period. I think once that 14-day lockup period hits, it'll be a very, very quick drop off, and that's even in the something like a day. Let's see what it says here. So we get to here, our unlocked withdrawals happen on this date, and basically that's the same day the contract balance hits zero. Now, there are scenarios where you can imagine there's 500,000 going in for a day or two, and maybe that extends it. See, this is 500,000 every day. That would definitely extend the life of the contract a little bit further, but it's not going to. I just don't think that's sustainable, and I think this putting a figure of 100,000 in my opinion gives us a view that of something a little bit closer to reality. So none of this is predicting the future. We don't know what's going to happen. Obviously, this model is my own approximation. I'm not making any guarantees. As I always say, this is not financial advice. Do your own research, make your own decisions. But realistically, with that huge upfront investment, it doesn't really matter what these figures are. It doesn't really matter what's going to happen on the next in the next 14 days, unless you do get kind of a sustaining of the massive investment. Then yeah, we'll get a few more days out of it. But if it drops down, as I would expect it to, within a few days back to 100,000, and then within a few more days, down to the 10s and 20s, you're going to end up somewhere along this line of a predicted end date of March the 26th, essentially 14 and a bit days after the minimum lockup period ends. So I would be prepared to say, March 26, 27, 28, probably as long as this is going to last, in my opinion. But, we don't know what the exact numbers are going to show. So knowing this, why did I put money into it, and what's my strategy? So I'm actually trying a slightly different strategy here. What I've put money into is this daily profit, this plan one. And the reason being, there's 122% return. So 22% on top of my initial investment. I've only put in 20 MATIC. I'm not going to get rich from this, but this is all just trialing these different strategies, seeing what works and seeing what makes sense. I only did this about half an hour ago. So basically put 20 in with the assumption that the contract is going to be good for 14 days on the basis of this model. So if we know that no one's going to get their money out for 14 days, I know that over the course of these 14 days, I'm going to be able to collect my daily rewards, my daily returns. up to the point where it just drops off suddenly. So I think given that we're 24 hours in, if we can get, if it extends slightly beyond this 14 days, for example, there are a couple of reasons it could do that. One is because the daily investments are a bit higher than what I'm expecting. And number two is potentially if people are going in other plans, longer term plans, then this might actually go a couple of days. So that's why I say 27, 28th of March, it'll likely fail. And by that time, I should get that 122% back. And I think this is a good strategy because really, I'm not here to, this is a double your money type situation. They don't come along very often. I don't think it's realistic to expect that you're going to double your money. If you were the number one investor in this, you might kind of double your money if you got in really, really early. But for everyone else, for me, I think coming in on day 2 or day 3, this is probably a good bet. I'm hoping I get 122% back. If not, if it fails a little bit early, maybe I get back 110%, 105%, or at the very worst, if it fails kind of at the worst case scenario, then maybe I get back 95% and it's not a big deal. Like it's not a big deal either way. We're talking about 20 MATIC here, but I really just want to test this approach, test this strategy, and see if that is something that is effective, and I can apply to other instances of this, because it's a good opportunity there. If everyone is in a locked plan, if everyone's taking the quickest lock plan or one of these other locked plans, they're not going to get their money till 14 days, by which time you will have already made a return back. So that's the way I'm looking at these lock plans and my strategy there. So look, I think one thing I wanted to just look at before, and I'll do this in real time, so apologies if this takes a little bit longer. I just wanted to have a look at these transactions because I didn't do this analysis earlier. I was keen to just show you what I've worked out. But if I do the extract here, and this will show you a little bit about my process. If I do the extract, download all the data out of Polygon Scan, take a look at this export. Let's have a look what the data shows. And the reason I'm showing this is that I would like to see if there's anything in there that is suspicious. So I'm just going to filter this data. These are all the transactions that are on chain. What I generally do is filter out everything that's not an invest transaction, because that tends to be kind of junk, everything that is in error. And that gives us all the real transactions. Sorry, did the wrong filtering there. Everything that isn't in error. And you can see the value in, that is the total amount that was put on the chain. So filtering this by, if I look at the date, so the first transaction's on the 11th. I'm just looking for any kind of whale transactions to see if there was something massive. So 21,000 went in early. That's pretty big. And kind of as I go through, it doesn't look like there's anything massive that just kind of jumps out like in the hundreds of thousands or anything. But what if I were to sort this based on largest to smallest? What kind of values? Okay. So we're actually getting quite a lot of big investments, and I'm not sure how typical that is. Might see if I can do some analysis on this. Maybe there's a curve that can come out, but a lot of small investments. But there are, it seems, just as a quick check, there are 40 transactions here over 10,000 MATIC and up to a maximum of 35. So look, I would say that doesn't seem too suspicious. Just as a quick look down here, I'm not, necessarily seeing at an easiest check. Well, this one is duplicated actually. And that's, I wonder if we can filter by this. Okay, let's see if we can just filter by that one. Yeah, so from this one address has made a deposit of a total of So I can't see that I've actually got something in the way there. I might just do a quick formula. Can't see that corner of my monitor due to an obstruction. So 100 and... Wait, that's a... Is that right? So I think it's actually catching the other cells in between. Yeah, so 100,000. So I've got 100,000 invested from this one address. So I really don't know what to make of this. I'm not sure if that means there are whales who are just dumping a lot of money in on day one, and maybe that's how they do it. Maybe they've got a number of different projects. They just dump as much in as they can on day one. Or it could be the devs themselves making these big deposits. But look, if you get a few of these big deposits, it quickly adds up to the millions that we've been looking at. And I just don't see from a sustainability perspective that they're going to keep dropping money in. So I wonder what else we can get. See, the problem is there's not too much information here. You get the current value of that deposit, you get the transaction fee, you get the historical price, and that they've invested. You don't get really which contract they've invested in or anything along those lines. So that's a limitation in the analysis, and that's why I've got to make assumptions based on what I think people are investing in. You can't really see which they're investing in. So I'm going to assume that they're in the 14-day. If they're not in the 14-day, like if these whales are not in the 14-day and they've kind of decided to go into say the same one as I have, the plan one, then they're actually going to be taking daily profits, and we're going to see the contract balance drop in a different way to this. It's not going to follow this curve up and then drop down. It's actually going to just kind of start dropping down much quicker up front. So look, I'll monitor this. I'll see how it goes, whether or not we're kind of following one trend or another. But what I've done is just put 20 MATIC into the daily withdrawal in the attempt to make back 22% and get a slight profit there, just to see if that strategy is feasible and if I can apply it to other dApps. So thanks for watching. I think that's about it. Just to quickly say, this is not financial advice. Please do your own research. This is very risky. This is this is a brand new dApp. This is completely untested in many ways. We don't know where this is going to go, but where my model takes me is basically keep your risk low. Only go into one of these low plans. You could go into plan 4. I'm not telling you not to, but you need to get lucky, in my opinion, to get your money back. So that's about all. Hopefully this has been helpful, and thank you for watching. See you in the next video.